So the single stock compass, consumer names, tech names, they've all kind of moved up to the sell call part of the distribution up here. Now, whilst it does look toppy, you know what it's like, right? With these techs, you sell them at the top of the range and then they just blast higher. So I'm not convinced of fading it aggressively on the tech side, but looking at Broadcom, they've got earnings on the 5th of September. Now, Broadcom is extremely correlated to NVIDIA. All these semi-names are kind of moving in lockstep right now. NVIDIA earnings are on the 28th of August, right? So not this week, but next week. So if NVIDIA has got an implied move of 10%, and let's say it achieves even half that move, right? That's a 5% move on NVIDIA. That's probably going to move Broadcom, right? Given how strongly correlated they are. So the whole sector is probably going to move on NVIDIA earnings. But Broadcom, if you own options in the 6th of September that captures its earnings, the implied move is only 6% for Broadcom. So I kind of think owning vol in Broadcom in 6th of September, you've got a bit of a free option on any movement on NVIDIA earnings, and you don't take any vol reset or very much time decay if you own that vol, especially if you fund that vol with some wing options in that bucket, basically, right? So what I like is something like a reverse iron condor where you own you spend $6 and most of the structure can be worth is $10. But the point being is you're going to experience very little decay if Broadcom does nothing for the next week or two, because the earnings implied move of 6% is probably going to hold the premium of this structure up quite a lot, right? So, and if you've got a move on Jackson Hole or if you've got a move on NVIDIA, then this thing will probably make you some money. Now, it's not going to make you loads. It's not going to give you loads of leverage to your capital. You're going to spend 6, maybe you're going to make 1 or 2 out of it, basically. But my point is that 1 or 2 that you can make comes with very little risk because the time decay on this thing is going to be minimal, right? So I like that. I think your return on margin is quite positive here. And this is quite a nice way to structure a trade because we're leaning on the fact that Avgo is very correlated to NVIDIA and NVIDIA's got a catalyst coming up before Avgo has, right? So that's the idea, trying to piggyback on NVIDIA's volatility via Avgo, knowing that Avgo option is going to hold their value for their earnings, right? Quite an interesting trade, I think. I'd be happy to know what you guys think about this idea. It's probably one of the ones that I am going to actually action myself. I don't always action all of these single stock trade ideas because I'm just showing you how I come up with them based on the guidance from the strategy compass, based on what's happening in the macro. But, this one, I would say is probably higher conviction than the majority of, because it's quite neutral in terms of delta. I'm not taking a strong delta view on this one. I'm just saying this optionality is going to hold well and it's going to give me exposure to any kind of move in the next couple of weeks without taking much downside. So I like that because it's quite neutral in terms of its directional bias. It doesn't really have one, right? And it's a volatility idea more than anything else. Okay. So that's what we're looking at today. Let me know what you think. All right, guys, that's it for today's one. Cheers for watching. We'll catch you all tomorrow.
Hi, everyone. Thanks for making it to the end of the video. Remember, this is just a little taster of what we do at Options Insight. To get access to all our research, including my in-depth vol market insights, flows and positioning report, and my portfolio trades, and a whole lot more, you can sign up for a free 1-month trial at options-insight.com.